Welcome, this is Mike Hamilton from Trade the Easy Way. It's 9:15 UK time. We've got ECB decision today and inflation tomorrow and Fed next week. So where are we in these markets? Incredibly range bound. Ever since we came up here, this is the Nasdaq by the way, daily chart. Ever since we came up here on the Friday the 27th, we've been stuck in this very tight range. So until we get a close on one side of that little wedge, we won't know whether this is a declining wedge or a rising wedge. We're certainly getting lower highs and just about lower lows, so the potential is for this to drop out the floor and at least retest the lows, if not go lower. We look at the DAX. DAX had a really good start to the week, and then last couple of days peeling right back. So yeah, as we're going into the ECB, we're only 3 hours away from the ECB decision. They are looking like they may announce that they're looking forward to a rate rise next month. So that could potentially trigger a move to the downside here, but we're holding the 20-day average, so we're right on the line with the potential to break down. Again, we need to see how we're going to close, but a lot of red on that chart. We've rejected this 14,700, and we could peel right back to 13.9 or lower if we break. If the reaction to the ECB decision is to break that low and come lower. FTSE, same story, hit our heads against this resistance up there, and we are potentially falling out of that support. Let's look at the Dow. No, we've done enough indices. Let's look at oil. Big push up in the oil. Very shallow pullbacks. At the moment we look as if we go back to 125, 130. We touched 121 yesterday. So let's see how we behave, but next stop is at least 123, 125. Gold. Sitting on this support, this huge 1848, 1850 support. US inflation on Friday. We're holding the 20-day average, but we're under the 200. So everything is poised. Silver, we had a lower close yesterday, so same story. Another lower close here, and this could see this roll over. If we can rescue this level and start closing above 23, then I think we can march up. And here's the telltale sign. This dollar came off from mid-May, and we all through this part of June so far we have found our feet, and we look as if we're potentially going back to the highs. So that's the reason why the divergent healthy relationship between dollar and particularly the US indices. If this is going to pick up, we've already seen how the US indices are potentially breaking down. Alright, and the same could happen to, same is already in the process of happening to the DAX. So it's about whether they can rescue the DAX today or not. Just look at a few key stocks. Barclays has had this lovely move off of these lows and broken out of this trend line. We've hit, so at the moment we're shuffling around in this range, and we're just very close to this resistance. So if we can't close above 170, 175, we could potentially go and visit these lows again. bank rate rises tend to favour, central bank rate rises tend to favour the commercial banks, as they can increase their profit margins normally. Alright, so this is a bellwether which is holding up, but as so many of these charts is on the line. Just an update on Card Factory. We've been talking about this off and on for a long time. But I got short up here at just above 65, and we're currently trying to hold 61 here. I think this is a classic bear rating situation for me. This fits my bear rating strategy very, very well. I'm looking for this to go right back to 45 and potentially down to 30. We're making lower highs here and lower lows here, and this move here has gone right into this resistance area. We've broken support, so we may accelerate here in the coming days and weeks. I think it's in a sector that I think is very extremely vulnerable. Very competitive market, very fine margins, and this was this big push up here on the 21st was when they refinanced the business. So as far as I'm concerned, that gave me a great opportunity to short this. I still think there's opportunities to get in this. Any pullback to 62, you're going to need really to get your stop right above that 67 if you want to get in this. You don't have to have that bigger stop. Something as close to 64, just over 64 would help. But I think this could potentially accelerate. And look at the volume. The key to this, my strategy, is if you come up on lower volume, this goes for any stock, even if it's a bullish stock. If you come up on decreasing volume, then that's the oxygen of the market. So the chances of that sitting up or staying up is at the very least low. And in the case of a bear rate strategy like this, yeah, we could really see a capitulation if I'm right. Alright, this is just a prediction. It's not, nothing in trading is a given. So if you are going to short this, do your own analysis, work out your own risk parameters and manage the trade so that you protect your capital at all times. This goes for any trade. I'm not here recommending buys and sells. I'm just telling you what I'm doing, telling you what I see in the markets, and then it's up to you to manage your own risk as to whether you want to follow any of this. Alright, so trade carefully, protect your risk at all times. Hope that all helps. Happy trading. Next update is the major review on Monday evening. If you haven't got a link for that, let me know. Thank you. Bye.